What is going on with the Lakewood Ranch real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group. Hope you had a great 4th of July. I'm still rocking my red, white, and blue here today. And happy back half of 2025 to you. And this is a month over month and year over year review of 9 key metrics in the Lakewood Ranch real estate market. Color coded, I'll get into here in a second, but we're going to look at these trend lines and see if they are favoring buyers, favoring sellers, or neutral. And we have long-term perspective on this. So the idea here is that by watching this, you get a handle on the market and know how to navigate it if you are buying a home, selling a home, doing both, or plan on doing so in the next year. You know where these trend lines are going. And so without further ado, let's just jump right into the data itself. There's no script here. I'm just kind of talking through it and giving perspective on what I see. So color coding here. First of all, this is a month over month look at 9 key data points, kind of vital signs, if you will, of the Lakewood Ranch real estate market. And if these trends are moving in the direction of favoring the seller, then it's going to be in green. If it's moving in the direction of favoring buyers, it's going to be in red. So first thing you know, it's about a 50-50 split last month of June of 2025 in terms of comparing to May. And we'll start with some of the bigger movers here, and kind of surprisingly to some, that new purchase contracts and closed sales dropped pretty significantly in June compared to May. Purchase contracts fell by 17%, closed sales fell by 16%. Obviously, those are going to be both in red, as that's not ideal for sellers when less homes are selling. Also dropping pretty significantly, and I'm not going to put too much stock into this. I'll explain why here in a second, but the average and median close prices. So this measures the 176 properties that close. This does this does figure all residential properties. So single family, townhomes, condos, all included in here. But the average price of what closed in June was 7.2% less than what closed in May. So that ends a run of 2 straight monthly increases of average selling price. Median selling price fell by 6.1%. You can see there's a big jump the previous month, but it's still up significantly from the month before that, and the month before that, and the month before that. So at 600,000 median price, we'd have to go all the way back to January into February to see that before May. May was a big jump to 639. What also fell was the median sold price to list price ratio. What that means is, what did a home close for compared to what was the final asking price when it went under contract? So all 5 of those metrics did move in favor of those of you buying a home. Obviously, when less homes are selling, that means less competition for you as a buyer. So that's super helpful when you are out negotiating offers. All right, flip side of that. So the metrics that came in favoring sellers. Market times. Market times got a little bit quicker in June for the homes that did go under contract. 10% less average days on market, 11.3% less median days on market as compared to May market times. And it kind of goes back to April trajectory, or April speed at which homes were selling. Available homes. New listings. Let's go to new listings next. New listings fell by 13.2%. So 250 properties were listed in Lakewood Ranch, kind of matching April numbers. May jumped up to 288. So less new listings. Again, less new purchase contracts, 16.9%. But the big picture here is that inventory continues to fall. So total amount of homes that are sitting on the market fell 3.3% month over month for the 3rd straight monthly decrease. Topped out so far this year at 969 homes on the market. Actually, that should be, 3rd straight monthly decrease. So there's the month over month picture. Now, how does that compare to last year? Let's take a look at year over year. Forgive me while I scroll here, but there's a lot of markets that we track. Year over year, so this is going to compare it to June of 2024. So first thing you notice, there is a lot of red. The only thing that has improved if you are a seller is that the median price in June of this year is up 2.6% compared to June of last year. Now, median price up, yet average price down a good amount too, 10%. So what that typically means is that there are less high-end sales to float that average price up. Not necessarily indicative of values across the board, yet for the 176 homes that closed last month, their selling price was an average of $731 compared to last year, those 239 averaged $812. Median sold price to list price ratio. I explained what that is a little bit earlier. Relationship between closing price and final asking price. That took a pretty sizable dip when we're talking about a scale of what's usually 95 to 100 and change percent. So a 4% drop there means that buyers are out there scoring better deals relative to asking price. It can also mean that, well, this only measures homes that closed in the last month or in that month compared to June of 2024. But check this out, closed sales down 26.4% year over year. Purchase contracts have that at 12.2% drop year over year. Don't have data on how many homes were available this time last year. However, new listings up a very healthy 19% year over year. Market times also up 15% on average, 29.1% median. So year over year, those trends obviously go, for the most part, besides median price, in favor of buyers. Now, a little bit longer term perspective. We're going to take a look at a few graphs here to wrap up, and then I'll give kind of my 2 cents at the end in terms of advice on how to navigate this market. All right, so first graph here, average and median days on market. Average in the blue, median in the red. Obviously, and let's go back. This scales out to February of 2024. That's the first month that we started tracking this market. Now you zoom out, obviously it's an upward trajectory with some peaks and valleys intermittently throughout the entire cycle here. Now, you can see it's done this before. January that spiked up, May of this year that spiked up and dropped down. Only time will tell. We'll report back at the beginning of August if this downward trajectory in market times continues or it spikes back up and does what it's been doing. But overall, upward trajectory there. Now this graph is a little more complex. There's 3 measures here. Total available homes in the red. Didn't start tracking that until January of this year. New listings in the blue, so how many homes were listed in any given month, and then new purchase contracts in the yellow. Now, here's something important to keep in mind here, because I have this conversation with particularly home sellers a lot. Now, the overall feel of the market is that there aren't any buyers out there. Homes are sitting out there forever. Nothing's selling, blah, blah, blah. And the reason that it feels that way is because look at March of this year when total inventory jumped from 704 to 969, and it's been over 900 homes available as of the first of each month ever since then. So the gap between the yellow, which is purchase contracts, and the red, which is total available homes, just widened dramatically in March of 2024. So if you look at the number of purchase contracts over this course of time, it's not a huge difference, right? And on this time horizon, it peaked out in March of last year, kind of started falling below 200, bottomed out around the time of the storm, and then started, zigzagging up and then ultimately trending up. Hit over 200 in March at 227, hit over 200 in May, just 2 months ago. But it's kind of hovered around or averaged around that 180 to 200 homes going to contract every single month. Yet the competition is far greater. So the same number of homes are going to sell. It's not like demand's going to spike just because inventory does. So the same number of homes are, roughly going to sell every single month. You just have more competition. So if you're a seller, you have to think about how you're going to beat out your counterparts, your seller counterparts and vie for one of those 180 to 200 purchase contracts that happen every month. New listings haven't really experienced that big of a spike, going from December to January, pretty healthy spike, but other than that, been fairly consistent between 250 and 300, even going back into last year. Now, closed sales. Closed sales went up, closed sales went down, closed sales went up, closed sales went down, up, down, up, down, up, down. Generally ranging, except for February, generally ranging between 150 and 150 and 240, we'll call it. So had some months over 200, have some months under 100 or under 200 this year. We'll just continue to see how this scales out over a longer time horizon. But again, homes are selling. Average and median price, average in the blue, median in the red. So I know it's a fairly short time horizon, about a year and a half, but the consistency in terms of the trajectory of these lines is what stands out to me. Everyone's talking about these dramatic price declines, and yeah, the average price is down year over year if you just look at June of last year compared to June of this year. Yet it's not like this, it's this falling knife of long term, every single month the prices are going down. In fact, look at December of this past year. Look at that spike there. And yes, it's trended down since then, but there's been some spikes in there as well. So last thing on the graph, this one's important. This is median sold price to list price ratio. Now, you can see over this course of time, the number's been in the high 90s, yet 2 of the last 3 months, it's been in the 95 to 96% range. That means that sellers are striking bigger deals when a buyer offer comes in over these last 3 months, on average. Now, that's not to say like everyone's gonna go out and shed 5-10% off their asking price just to make a deal happen. However, there are certainly going to be some instances, some opportunities to negotiate a lower purchase price and or higher concession. So keep that in mind if you're buying a home. Use this data to your advantage, and we're certainly here to help you do so. My goal is to be a resource, whether we never interact in person or you feel like this perspective and my expertise can help you with your real estate goals. If that's the case, would love to hear from you. So make sure to drop a comment or reach out to me on the socials. Again, Sean Reddy of the Keller Williams Reddy Group, and thanks for watching. We'll see you next month.